I'm Peter Reznicek from ShadowTrader.net, and this is the Weekend Edition. As we've come into the month of February, we have been mostly bullish except for Friday, where we pulled in a bit, and we did so right at a very key technical level. So basically the market was doing exactly what it should. I'm going to show you that level, and now the big question going forward is, are we going to pull in to a higher low or not, or is this going to be yet again another big retracement like we saw on the DeepSeek low and also on the tariff low? So we'll get into all that in the show. I've also got two other charts I want to share with you on this show. One is going to be our #1 draft pick, and the other one is going to be in the charts to watch segment, both of which I think can make you some long-term money, kind of an idea that's going to generate over some time, but both of them could be big winners, I think, if you sit with them and if they play out the way that I believe they are going to. All right, all that and a lot more in today's Weekend Edition. All right, let's get into it. This is the Weekend Edition for February 7th. And we always kick it off with a little new thing we started called the Weekend Review. So I'm going to switch over to that so we can see how we played out over the course of the week. Remember, this is always marked from the Monday open to the Friday close. So it does not take into consideration any weekend gaps. That's the way I look at the markets. And you can see we're pretty positive all over, even though with the Friday pullback, because all of the early days of the week were all pretty much up. You can see the S&P tacked down about 1%. NASDAQ tacked down 2% over the course of the week, even with the pullback on Friday, and Russell up about 1.5%. And all sectors here were green except for consumer discretionary. And the clear winner obviously was tech, which makes sense, right? Pretty strong and kind of pushing the market since this is the heaviest weight in the sector. And XLRE was also strong because rates came in a bit, as you can see over here. The yield on the 10-year over the course of the week came in a bit. That caused bonds to rally. We're going to talk a little bit more about bonds later in the program. Gold had another great week. I'm looking for any pullback I can find to buy GC contracts. We also sold some put contracts in the weekly options room on GLD this week. We'll continue to do that as it moves down. Every time we get any kind of a down day in gold, we will be selling puts because we feel that it's going to be bullish and stay bullish. Oil got killed, so that XLE pullback has actually moved lower, and Bitcoin didn't have the greatest week either, down about 1.67. All right, so that is the week in review. Now, more importantly, let's look ahead and find out what's really going on. Okay, let's get into the technicals here. What's really going on, as I always say, this is what's really going on, as opposed to all the noise and news that a lot of people kind of latch onto, I think, mistakenly. I think they need to pay more attention to exactly what's happening in front of them on the charts. So that being said, we came very close to a downtrend line here in the S&P. And I just point that out because when I show you the NASDAQ 100 chart, you'll see that that reversal was literally like right on. It was just a spot on reversal in terms of reversing there. But what we're dealing with in the markets right now is, just to recap, this was the DeepSeek low, and this was the tariff low, right? And you had this gap down, and it took it all back, and then you gap down, and you made a lower low here in the S&P, which is noteworthy because the NASDAQ's a little bit different, as I'm going to show you. And then we rallied all the way back. But in doing so, we did make a lower high in the S&P. So I'm kind of carrying that forward in my narrative. And if you can just take away one thing from these videos, or I should say from this video this week, is that given that we've gapped down twice now and taken back all of the weakness, this week is going to be all about whether or not we put in some sort of a higher low here, we'll call that HL, and turn back up and go to the trend line. And that would, of course, be very bullish. I'm not predicting. I don't know what's going to happen. I have no long position right now. We're positioned pretty well in the weekly options advisory. We're pretty much all short calls basically right now, which is what we wanted to be. As we were moving up into this area, we're shorting calls. And because, understanding that this resistance is here and it's probably not going to break right away. So if you're trading in the short term, that's kind of the way you want to be. So as we've come back, we've lost the 8 and we're sitting right on the 21. So this is noteworthy. But again, it can turn around here. Question is, does it do so at a higher low and turn back up, or does it come back down into this area and retrace most of this move again, whereupon we would expect something lower, and then probably this short-term trend line would be in play, and maybe we're looking at something around the 58.40 level. We shall see. I mean, this is the straight technical, but understand that we've been in a market right now where sellers have absolutely not been able to get a foothold. right? As you know, even with these two very ugly news-driven gap downs, it was all bought right back up. So this is why I'm thinking that because this was bought back up twice, is there potential that we put in a higher low and go up? I would not get ahead of it, but if I saw some sort of balancing action that started turning up, like one way you can look at it is that if you have action on Monday, for instance, that comes down, and then when it comes back up, it re-enters Friday's range, that may be a signal. That's usually a good way to play it when you're looking to try to get long. That's like a reversal that can be played while the charts are developing, as opposed for looking for some sort of a reversal bar that you're looking at the end of the day. That may be too late, or you'll definitely won't have as good location as if you did when you enter back into the bar. So keep that in mind, rather. That's something I'm going to be looking at very, very closely on Monday. Let's move over to the NDX, which, as I was saying, is really kind of the star of the show here. And I say that specifically because the trend line action was literally like dead on. If you look here, you can just connect, and look at how it connects perfectly. So early in the morning on Friday, we went like right to it, started backing off. I think that we're in better shape on the NASDAQ 100 because of the fact that we didn't take out the 21. If you recall on that other chart I just showed you in SP, you were actually lower than the 21. So again, same exact situation. Are we going to come into a higher low or not? You've got some support here from short-term trend line right here. And that's basically the play, right? Is it going to come into a higher low and turn back up or not? Or are we going to come here and breach? I think one thing that's noteworthy that I want you to carry forward in your narrative is the fact that except for this sort of day and a half here of action right here, this is a very key area in the NASDAQ 100, right around this 28, because look, you've got 1, 2, this one went through, then you've got a higher one, a slightly higher one here. It's all kind of in the same area, right? Like retesting this 21,000 round number, I think is going to probably set things off to the downside. If at some point the market loses this level in the NASDAQ, the 20,800, then you have to assume that all of this balance area is overhead supply. This is kind of a balancy area, which is about 22,000 to 21. Let's just keep it simple. Let's say it's 1,000 points. What that's going to do is then double the balance area is going to be the distance that it could go. And you're going to basically set up your box like this down to about 20,000 or just below. If we were to get some acceptance below this area, that's what I would expect would happen. So that's kind of the bear case. And like I was saying, the bull case is that you somehow come into a higher low and you retest the trend line again, and then you will go. Okay, so that's your TA for the week. NASDAQ 100 and S&P 500. Carry all this stuff in your narrative. Carry it forward, I should say, in your narrative, because it is all important. All right, let's talk a little bit of profile here, if we could. I don't want to get too deep into this, but there's some nuance that I want to talk about below us. So first things first, we have a decent excess high now above us. Excess high is when it's skinny up on top. And it tells you kind of that the auction ended the right way. So the up auction is over. Now that doesn't mean it's over forever or over for good and that we kick off a new bear market. It just means that it ended properly and that this high here is decently secure for the time being. So the auction, basically the up auction that ended was the auction that was all week. As you know, early in the week we gapped down on the tariff news. That was then reversed, and the market just kind of rallied from there. Monday, Tuesday, Wednesday, Thursday, and Friday we hit this low. And like I said, it ended properly because it left this skinny part on the top. So that is an excess high. You want to pay attention to that. Carry that forward as somewhat secure, meaning that you could sell against it. And if you look at the 4 days that I was talking about with the big, it started off with like the big gap lower, or at least some gap lower here, right? Here's where you kind of came in weak on the close of the prior week, right? You closed weekly, and then you had the small gap down, and then you kept going lower. And then the reversal from there, all of the value was essentially overlapping over the course of the week. You see these value areas, they're not really clean to the upside. So that's kind of slightly less bullish. But what I'm mostly focusing on in the profile going forward is the fact that you've got these single print sections. As the market was moving up off of that low on the reversal, everything was very emotional. And this is like a lot of short covering where it's very skinny and the whole thing kind of looks like a letter P formation when you have the profile looking like this. See how it's like a lowercase p? That essentially tells you that a lot of the move was short covering and that there's a lot of emotion in this move. And as we know, we look at this stuff because emotional moves will probably get retraced or won't have as much support on the way back down. as opposed to less emotional moves that are more indicative of longer term buyers. And you can see on the next day, we did it again. We had the bottom single prints there, and we did it again the next day. And then we did it even the day after that, except those were repaired today on Friday. You can see on the fourth day, we also left that same pattern where we kind of went down to some lows, rejected, and turned back around really quick and went back higher. And over all of these sessions, the value was overlapping, right? There was really no value that was breakaway clean to the upside. Maybe this one a little bit on the Thursday value was a little bit higher than the Wednesday value, okay? And that brought us into Friday, where again, we had the excess high. And on Friday, I would say it was a decent amount of kind of confirmed selling, I would say, because your value area is breakaway to the downside. You can see the distance here between the two values. So that's a little bit more bearish than if it was connected, right? If the two yellow areas were touching. And it also tells you that people were committing a lot of volume at the lower end of the spectrum here, which you know by the fact that the value area is lower, and also more importantly that the POC migrated lower. We call that POC migration. So this would be less bearish if that POC, which is the fairest price to do business, or the area where the most number of contracts traded, or even where the most time was spent, right? You can measure it by volume, you can measure it by TPO, meaning the amount of letters going across, and this is the widest point, and the widest point is relatively low in the range. So we call that POC migration. Again, if that POC was here, 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 whatever, it would be less bearish. So remember, everything I'm talking to you about is one data point. Don't ever just extrapolate one data point out and be like, oh, well, it's definitely bearish, because the POC migrated lower. It's one piece of a larger puzzle. The market profile itself has multiple data points we put together. Like, for instance, I just gave you two. Just in Friday's distribution, I told you had POC migration lower. That's a little bit more bearish. I told you there's an excess high here, which is somewhat secure, so you want to watch that, meaning on any rally, you would expect that it would fail and not go back to this level right away, or at least not in a day, not on, Monday or whatever. So keep that in mind, all right? What else can I tell you about the profile moving down here? That's about it. I think those are the main takeaways from what I'm looking at. I'm keeping in mind that these single prints are here and still need to be repaired. This is not an RTH low anymore. I mean, it is, but it's not the RTH low. That's always the prior day. Your single prints here from February 3rd, and then as you go lower, right, that's an overnight low there. But remember that there is still a relatively large unfilled gap below us, which is, you can mark it from here, which defines the gap between these 2 days. But this area here actually went lower. So some little piece of it here was filled. And that is the unfilled gap down below us, all the way down to 5909.75 in the future. So keep that in mind. Sort of out there in your narrative, right? It's like a further out potential target if something happens. If you see weakness next week, for instance, that takes out, say, the Tuesday, Wednesday, Thursday, or a lot of these days where we reversed off the February 3rd low, and for instance, you get here and now you're in danger of repairing these single prints, well, then you should probably start looking at this as a target. You may want to put on some sort of an S&P structure or be shorting futures or whatever, and just kind of keep it out there. Have imagination. It's really important to be imaginative in the market and think about where things would go. And this is the whole point of the profile, is very simply to look for signposts that are going to give us market-generated information as to what's more bearish, what's more bullish, if these levels are taken. And once they are, it also gives us signposts and targets looking ahead as to what could be targets going forward, which gives us a very good idea of, quote-unquote, like where the market may go. Okay, time now for our charts to watch segment. And in this week's show, I want to talk about TLT, which is the ETF for the long bonds. And the reason I bring this up is because it seems to me like bonds are bottoming here. And I know that bonds always move, opposite interest rates, but there could be something else in play here, even if rates kind of stay firm. And I'm thinking what might be in play here is that it is a flight to safety or a haven trade. This is how bonds have traditionally acted, although that relationship has been broken over the last couple of years, where we've seen stocks and bonds move together a lot. But, historically, it's generally been opposite. And if there is some sort of a downturn in the market, they would usually, money would rotate into treasuries. And Given how gold is acting recently, right? As you can see, it's just very, very strong. Even as the dollar has been strong, gold has just been going, right? And that just really shows you how strong gold is, because it's relatively hard for gold to be bucking dollar strength. And it's just moving up really firmly. And I think it's doing so because it's a haven trade, right? It's the fact that there's a lot of uncertainty going on in the world now. And it's, potential that inflation is going to stay sticky, and gold is like the hedge against all of that. And that's why you can see how well it's moving up here, breaking out to a new all-time high here late last week and then continuing higher this week. And so my thesis here is that could the treasury bonds be the same thing? And when you put it together with technicals, it does seem that way, because notice that when we made this low here, it's kind of a pretty perfect inverted head and shoulders, right? This is an inverted head and shoulders, which is a bullish pattern. It had some difficulty breaking through this level. And then when it did, it went right to trend, hung out for a second, and backed off. And so the play, I think, here is that will it put in some sort of a higher low, maybe pulling back to this area? And if you retest the trend line again, then the odds would favor that the long bond would move up. So this might be something you might want to squirrel away for a longer term trade, is, put some money into this TLT and, see how it goes for a while. Because if people are looking at this as, like I said, a haven trade, and as, the alternative maybe to, to equities, then we might be seeing this higher. And also, as I was saying, the technicals certainly point to it, because this is a longer term downtrend that is now potentially breaking. Okay, time now for number one draft pick. And believe it or not, it is Ford Motor. It's kind of a cheap stock. I generally don't like cheap stocks. I don't trade cheap stocks for a trade, but this could be a longer term trade. I have seen that whenever this stock moves below the $10 range, there's usually some sort of a rally. I do think this is kind of a longer term play. And don't bother barraging the comments section with everything about EVs. I get it. I know they're probably losing some money on EVs, and they kind of went hard on that, but they're also making a lot of money in hybrid right now. And hybrid's doing very well for them in a lot of markets, especially overseas. And I think they're going to be okay, to be honest with you. And so when you look at like a monthly chart, for instance, longer term, you can see that there were two large declines going back here to about 07. This one here is global financial crisis, obviously, when you made this low. And you can see the stock went like somewhere in the $1 range. And that's obviously not happening again. This is when everything was getting smacked. And obviously, if they didn't get a bailout there, they probably would have potentially gone under. But they did get a bailout, and notice the stock went from like $1 to $19. So there's certainly a lot of opportunity there. And the other one here, in terms of major decline, is COVID. And this is what I call demand destruction, where demand just got destroyed, and obviously they got hurt along with everything else. And that took the stock to about 4. And I don't think we're going back to these levels, but somewhere in between here, and I know that's a very large range, there should be some buying opportunity. Now, where that is, I don't exactly know, but you want to see the chart kind of develop into a reversal pattern maybe over time, right? There should be at least some sort of a 2 or 3 day reversal pattern that will present itself at some point. They are going to do a special dividend. They are back to paying a dividend. They suspended it a little while back, but it's paying again. But if you look at this dividend here, they're going to be paying 30 cents. So it's usually 15, but there's an extra one. So if you want to get in on that, you just have to own the stock 2 days before this date, because that's the record date. 2 days before that is when it's going to go ex-dividend, and you'll collect the 30 cents. Obviously, on that February 18th date, the stock should gap down on the open 30 cents, right? Stocks get adjusted by the amount of that dividend, but then it can also rally back those 30 cents during the course of the session. So if that's something you want to take advantage of, I'm just kind of putting it out there that there is a larger dividend coming in the name. But again, where this comes down to, I don't know. One thing that you may want to look for is this: if there's weakness below this level, watch to see if a daily bar closes back above that level, and that could be the signal. So anything could be happening down here. Maybe you're buying shares, maybe you're not. But then when you come back up here and you have a daily bar close above this level, that could be the buy point. So that's one way to look at it in Ford. But overall, like I was saying, this is a longer term idea. This may take some time to play out. We could easily see more weakness from here. Again, the support from before doesn't come in until about this $4 area. But I do believe that somewhere in here, there's potential for a buy. And on a rally, you're probably going to go back into the mid-teens at the very least. So that could be almost a double, right? If you're a buyer somewhere in the $7 to $8 range, you're looking at probably 100% return at some point if you can get back into that mid-teens area. All right, and last but not least, let's do our little looking ahead for next week. This is where I give you a heads up on what economic data and also key earnings reports that you need to be aware of. So economic data is relatively light early in the week. You're not really getting anything until midweek. That's when we're going to get CPI. That's a big one. And also PPI. These are two numbers that the Fed looks at very, very closely to try to determine monetary policy. So these are important. Thursday is always employment day. You always get initial claims, continuing claims. And then on Friday, you've got January retail sales and capacity utilization. So all this stuff that I mentioned is only that economic data, which is of high impact. I certainly don't mention a lot of the other stuff that is relatively low impact. Earnings season is still on. A lot of the big tech stuff is behind us, especially like as far as Mag 7 is concerned. But I just list here the names that I believe are potential to move the market or that people will be paying more attention to, or as I always say, are probably worth a trade. And so to that end, you've got On Semiconductor, ticker ON. Vertex Pharma is on Monday. Tuesday is kind of heavy here with British Petroleum and Sunoco, two really big names in the energy sector. So watch what happens in XLE. That could be setting up a trade. Coca-Cola. And also Shopify. This is quite a stock that is often playable, I feel. And Supermicro Computer, SMCI, which is obviously not what it was price-wise. It's gotten knocked down quite a bit, but could be interesting if they have a gap. Wednesday is going to be Cisco, certainly not the sort of bellwether for tech that it was back in the internet bubble, but still something to pay attention to. And then Airbnb on Thursday is also reporting. All right, so that's your weekend looking ahead for the week of February 10th to February 14th. And that's my show for this week. Thank you so much for spending a little bit of your weekend with me. If you could, as always, please hit those like and subscribe buttons and also the bell icon so you can be notified whenever Shadow Trader posts new content, which of course is every day through our Shadow Shorts program that you can sign up for free on our homepage at shadowtrader.net. Recap a little bit of what we discussed. It's going to be all about will we or will we not pull into a higher low this week and then turn around and retest that trend line, which of course would set the markets up for higher. So watch closely for that. A couple of long-term ideas that I left you with, TLT and Ford. And beyond that, I just want to remind everybody that, as always, you can always take a $7 trial to all of our services. Remember, we've got Live Trading Suite, where we've got 2 separate rooms for the price of one, 8 different moderators, everything from stocks to options to futures, and also my room, which is a weekly options advisor. So check these links down below in the Chiron. They're also in the description. Take a $7 one-week trial to any of our services. As always, unlike the competition, you never have to call us to cancel. You don't have to send an email, nothing like that. We are always a one-click cancel, which you do on your own, and we're kind of proud of that because we think that is the right way to do business. All right, so check us out there at the links below if you want to do a deeper dive on the way that I trade or my team in the Live Trading Suite. All right, until next week, coming at you from beautiful Los Angeles, California. As always, I wish you good trading and good night.